Hello everybody, welcome back. In today's video, I want to take you back to 1974 because history may repeat itself. Today's economic conditions are very similar to what happened back then. We have high inflation today, we had high inflation back then. And everybody wants to know when the market would bottom. So in today's video, I want to show you what that indicator was and how it could mark the bottom in stock market today as well. So if you're interested in that, watch till the end. It's going to be a good one. Bye. So let's start with S&P 500 and compare it back to 1974. So what happened? So we peaked in the end of December 2021, and since January we've just been in a downtrend. So pay very close attention, and you can go back in the video and watch it again, but I'm going to show you once. Okay, so we peaked here. All right, that's our peak. We had first leg down, and then we had second leg up, then we had third leg down, the aggressive one, bunch of red candles, and then fourth leg we couldn't quite get to the trend line that we drew by getting the first peak. So first leg down, second leg up, third leg down, fourth leg up, and then fifth leg down. So just remember this: first leg down, second leg up, third leg was aggressive one down, fourth leg stop short, and the fifth leg we broke the trend line. That's very important, and we hit the 200 EMA. Okay, now let's go back to 1974 and see how it played out. You're going to be very surprised. All right, so here is 1974, and I'm just going to show you. It's on a weekly time frame as well, and just pay close attention. Okay, all right, so we had a peak in end of December, exactly same as what we have today. We peaked in the end of December, and January was just, since January was just down market. Okay, so first peak, and then we had a nice first leg down. Okay, and this took actually really long time compared to what we have today. Okay, these are so many weeks. It's already September, right, by the time you're first leg down, and that's not what we saw in today's market. Okay, so things can play out similarly but not in the same time frame. Okay, so peak, first leg down, rallied, we created the trend line. Okay, so peak, first leg down, second leg up, first leg down, second leg up, same as what we have today. Third leg down. Remember what I said, third leg was aggressive. And how many candles do we have here? 1, 2, 3, 4, 5, almost 6 and 7. Okay, this could have been easily red if it just was a little bit down. Okay, we had 7 red weeks consecutively, and previous time was 5 and then 6 and almost 7, right? It could have been. So, but very similar. First leg down, second leg up, third leg was aggressive like we had, and then fourth leg, what did I say? The fourth leg went up but fell short. It couldn't quite rally to the trend line. And so we had just tiny bit of rally. So that's fourth leg up. And fifth leg, we just broke the trend line. And this is very similar to what played out back in the past. So fourth leg up and fifth leg down, right? And we broke the trend line. And what happened after the trend line breaks? It doesn't just go into a straight downfall immediately. It tried to rally, right? It broke the trend line. It tried to rally, couldn't get above the previous weekly close, but it tried to rally. Whatever rallies happened, it just basically couldn't go quite up and just basically sold off the trend line. And then we had a nice capitulation move. And so once we broke the trend line, I think we went down 20%. So another 25, 26% down. And then we marked the bottom in the stock market. And then after that, it was a bull run. But I'm going to tell you something about this date, 30th of December. This was the key pivotal time which marked the bottom of the stock market. At this point, you would have not known that today's the bottom. You would have just not known. If you thought you would know this, no. If you're buying here randomly, you're probably buying here, probably buying here, probably buying all the levels. But there was a reason to know, or believe that this is the market bottom and we just buy. And I'm going to talk about that in a second. So the other interesting thing that I've talked about in my previous video, you can go and watch, where I said we are currently at 27% down, right? That was the lowest, 24% down. And then we rallied today, and so now we are at 18.6% down. Excuse me. Sorry, excuse me for that. And then we are 18% down currently. In my previous videos, I've told you that the worst case, the worst case is that the market could come down to 2300. It is possible. Anything is possible. Market could come down. Could be really brutal. May or may not. 3500 is a good level. 3200 is a lot of people are watching. 3000 people are watching, right? But the reason makes me more believe that it could happen if the economic conditions are really bad. We could come down. It's crazy if we come down. I would be really surprised. But see, back in 1974, similar thing happened. So if you take peak to trough, how much is it in the percentage wise? If I go from the peak, go all the way to the bottom, it's 50%. Okay? Let's look at today's market condition. If I go from the top to the bottom, can you guess what that percentage is going to be? You'll be surprised. It's 50%. So the market could come down like it came down. Trust me, guys, nobody wants that, okay? Anybody who's shorting is probably wants that, but I don't want the market to come that low. But it's funny that 50% is exactly 2300 level, which I think if it comes down to this level, I'm just going to go all in. And a lot of people are going to. But is the market going to come down to that level? That's the question. So now we go back to that key indicator that's going to define, is market bottom at 3500? Or 3200 or 3000 or 2350, because at 2350 level it's just going to be that market is so cheap, doesn't matter what indicator, just everything is oversold, extremely oversold, everybody's going to buy. So now let's talk about that indicator, which is crucial for this video and for the analysis, because otherwise how would we know when to buy? So I'm going to overlap on top of the S&P 500 inflation. Okay, so look at this. Since January, inflation was starting to go up. It was around 3.3% and it started ramping up. Everybody knew at that time the situation is going to get worse. So the market was going down, down, down. Inflation was coming up, up, up. And look at it. When on 30th of December 1974, market was telling you, economic conditions were telling you that, and market believed that the inflation has peaked. Inflation was around 12% at that time. So market rallied before finding out that inflation has peaked, like here, but it had a good indication. They had a very good idea, and obviously Wall Street is going to know when the inflation is going to peak. A lot of the big banks, economists, they know. Trust me, they know, and they're gonna figure it out, and that's how. And they are the ones pushing these rallies, not the retail. Pretty sure, right? You guys also know about that. So, as soon as the inflation peaked, market marked the bottom, and it started rallying up. So, that's the most important thing we're gonna have to watch in today's market. And kindly, if you guys enjoy the video, please do subscribe, and we're gonna cover that in the future videos, and we're going to keep a track on inflation and where we could bottom in the stock market. So I would appreciate if you guys like the video, give it a thumbs up and subscribe if you like. So yeah, I think inflation is going to be the key indicator that's going to drive this market up or down. So we're going to have a lot of readings every month. We're going to have CPI data, and we cover all of that in our videos weekly. So subscribe for that again. And I think that's all for today's video, and I will see you guys in the next one. Bye.